So today we're going to be kind of looking at my dividend investing portfolio, as well as talking about, is the market way too high right now to be buying into? So, have stocks gone up way too high to be able to even be worth putting money into it? So we're going to take a look at that, and we're going to kind of take a look at a few other things. Now, right now, what we're going to do is look at my portfolio, see kind of how the numbers are doing. If you've been following along, you can kind of see the growth of the portfolio as a whole. But we're also going to break things down here a little bit more, just as far as how the week has gone, how the month has gone, and look at the quarter. Now, I'm personally using M1 Finance as an investing platform. It's great for me when it comes to long-term investing and also dividend focused. If you guys are interested in trying out M1 Finance, until the end of February, they do have a nice $30 bonus for signing up. I'll have a link for them in the show notes down below. Check them out. Sometimes there are some requirements to get that little bonus, but make sure you do so before the promotion ends so you guys can get that nice little bonus. It does help support out the channel, so keep that in mind so I can continue to provide free stuff just like this for you guys when it comes to content. Now, I switched over to a smaller screen so you guys can see everything happening here in real time. I'm going to stare at my other screen here from time to time to make sure everything is nicely on screen. So you can see here I'm on my portfolio, which is nicely named Dividend Dennis. I do have other accounts as well too, just to kind of have that as a disclosure. I have a retirement account with Vanguard, and I also have a much riskier play when it comes to Robinhood. Maybe I'll do some updates for you guys in the future if you're interested in that. Now, what we're going to talk about here is my current value, which is a terrible line across there. It's 21,727. This is the highest it's pretty much ever been, so I'm very excited about that. So, in the last day, we've gained about $35 right there, which is nice. And the last week has been really, really nice. We've gained almost $728. And then in the last month, we gained over $1,200. Now, to some people, this might seem like a lot of money, and it is, right? Like it is a lot of money. But one thing I want to do is if we jump over to my All tab here in just a moment, I'm going to show you what I started off with in this portfolio, because it wasn't thousands of dollars. I didn't just put in 20,000 and then gain an extra 1,200. I actually started off with $100 in this account. So right over here, you're going to see this little thing called value over time. Let me actually zoom in really quick so you guys can see this. So right over here, you could see on January 23rd, so a little over 2 years now, I put in $100 in this portfolio, and I just, for a little bit, just tried to figure out what I was trying to do. Didn't really invest a lot. And then once I started, having an idea of what I wanted to invest, I was doing about $10 a week, getting really comfortable, investing in different companies, buying and selling out of stocks until I figured out which ones I wanted to have for the very long term. Then I started bumping up to about $20 a week, then $30 a week, then $40. What I was able to feel comfortable with, what didn't take away from all my other obligations, as well as, just like I said, feel more comfortable with it. So once I started doing that, and then the market started going down in early 2020, I started really bumping up, and now I'm at a position where I can actually be depositing a healthy amount in every single week. But it didn't start that way, and if you can't start off with thousands of dollars like I couldn't, then start with $100. That's all it costs you to get started with M1 Finance. But if you can do a little bit more, even better for you, because then you get started in the market and with investing. So that's just kind of showing people right there the importance of, actually getting started in there. So going back to this chart, when we go back to, because we talked about the month, we were up 1,200. Going to the quarter, we're up almost $3,000. This is all money weighted return, but I'll show you guys the unrealized because I know some people like that. In the last year, we gained almost $4,500, and then in my all-time, $4,700. Now, so to me, that is amazing. I think that is fantastic. Some of that is, of course, earned dividends, which is what we're going to be focusing in for the very, very long term. But I still care about growth in general. If we go to my holdings tab here, we can see that my unrealized gains is about $4,000. So for anybody that's curious why there's a difference between this unrealized gain of $4,000 and then this money weighted return of $4,700, is because there's been a couple times throughout this process right here trying to figure things out that I actually sold stocks for a profit, but I kept the money in the portfolio to keep on investing. So that's why you see that there. I kind of do like that, so I know that in all time, that's how much I've actually made in profit. If I sold stocks for a loss, I actually would have technically had that shown in there, but obviously I've made more in gains than I have in losses. So that's just that kind of number there, just going over stuff. Now, one thing I did kind of want to bring up before we kind of dive deeper into this, For a lot of people, I'm going to switch over to seekingalpha.com. So a lot of people have seen what was going on with GameStop recently, and I've had a few people reach out to me talking about GameStop. So real quick, I just wanted to interject over here for just a moment. So if you guys are enjoying this content, it does honestly help me out if you guys wanted to support the channel just a little bit more. So what I did is I actually partnered up with my friends at Earnest. They help refinance people's student loans. It can take less than 2 minutes to figure out if you can maybe save some money on your interest rates. So I'm going to have a link in the show notes as well, so you can go ahead and click on and go check those rates. If you do end up refinancing with that link, it does help support out the channel, but it does give you a nice little bonus for going through that process. But the best part is you might save more money on your interest, which means you can possibly invest more into the market and do more with that money. So check that link out below, and then let's go ahead and continue on with the rest of this video. So if you haven't already heard, which I would assume most people have, let's go ahead and go here. Like you can see this, the stock has kind of gone crazy. It went from hovering around $20 over, the course of a little while, and then it just started shooting up to over $145. I don't want to get into like the whole weeds of, why that happened and all that other stuff. Personally, I mean, obviously this is not financial advice, but for me personally, I'm not kind of getting into this whole situation with GameStop or any stocks that are having these kind of things going on. People want to take risks. That's their own doing. I'm personally more for the long term on a regular basis, but this stock kind of just seems to be going up like crazy for not really the right reasons, I guess you can say. So I'm not really interested in having investments in them. Plus, if you have been following along on this channel, you actually kind of know that for the most part, let me actually switch this over. For the most part, I actually don't like investing into a stock that has like jumped up, 40, 50, 60% in a very short amount of time, just because that means that, it could be coming back down and correcting itself. So for myself, if a stock has been going up like crazy, if I already own it, I tend to not buy more of it at that given time. I tend to slow down the purchases of that versus, maybe buying into stocks that are a little lower or not having that crazy growth, which is kind of what we're talking about here today is, is the market already kind of like hitting all these all-time highs? Is it worth still being invested every single day? Or sorry, every single week like I am doing, since the market is so high and, there's a chance for it to correct itself, which means, we might see prices dip a little bit. Because if we go into my activities here, I'll just show you guys. So, if we're doing our trades, so I do trades usually on a weekly basis. I'm trying to be always honest and stuff. Let me actually switch this back over so you guys can see a little bit better. Like my morning trade here, 250 that week, 250 this week, 250 here. You'll see a couple small ones here and there. Like I did one actually today as of this recording, I put like 20 bucks in. But for the most part, like that 250 has kind of been my average every single week. Again, I didn't start there. Let me actually show you so you believe me. So I started with that $100, and then when I really kind of started getting into it in late spring of 2019, you can see like the $10 a week that I was putting in, sometimes a little bit more. So, just go at your own pace, what you can do. There's nothing wrong with that, so keep that in mind. But the thing that I'm kind of considering is that, sometimes I'll put more in when the market is down because I want to get more value. But because a lot of the stocks are hitting their all-time highs, it's really, really tough. So if I go back to Seeking Alpha, this is GameStop. How fun. By the way, let me know in the comments down below, were you invested in GameStop before this whole thing took off or while it's taking off? Let me know down below. I want to hear from you guys. Have you taken your profits? Are you sticking to it? Like I said, I'm not doing it, but kudos to anybody else that can. So on Seeking Alpha, I'm able to build up my portfolio that I have on M1 Finance so I can see all my stocks in a different light. So they have this feature, making sure it's on screen. It's the 52-week range right over here. So what this does is it kind of has this little black dot that shows you, it's kind of grayish, but like right over here, the more to the right it is, the closer it is to its 52-week high. The more to the left it is, which I don't have a lot, but like this one right over here, the more to the left it is, the closer it is to its 52-week low. And if it's in the center, then it's in the middle, right? It's not at its highest, it's not at its lowest, it's right in the center. So the problem that I run into, and that a lot of other investors might be running into, is that a lot of these stocks are very close to their 52-week high. That's not necessarily a bad thing, but that also indicates that there's not a lot of places to get good deals on. As much as I still buy into Apple on a regular basis, I'm not putting as much into Apple at this current time just because of the fact that they're at their peak. And they could keep going higher. And I don't believe that that isn't a possibility, but the possibility is also that they might come back down a little bit and then I can buy more in at that price point. So my problem lies is putting, the same amount that I'm doing every single week, but maybe not getting as much value on those purchases because of the fact that a lot of these stocks are at their peak. Like, let's keep going down this list. So like if you look at this, I mean, you can tell based off of like this line kind of covering the dots that we have 1, 2, maybe this one you can consider 3, and then 4 stocks right over here. So there's about 4 stocks in my personal portfolio. Obviously, this is different for everybody's and, the different stocks you might be looking at. But there are a solid 4 companies right over here. It's a terrible 4 that are kind of well below their 52-week high, like pretty much right in the center or a little bit before that. And so that begs the question for me is like, does that where I put most of my money in? Because obviously if I believe in these companies and that they will get back to their 52-week highs, is this the time to put more into these companies than maybe other companies that I have in my overall portfolio? Now there's some good and bad to all of these right here that I have. So the problem with some of these are, one of them is AT&T, and I'm still kind of hesitant on buying more into AT&T, which is this one right over here. So they're like a little bit under their medium range for their stock price, but I'm kind of hesitant on doing more with them. And then the other 2 over here, these 2 are real estate stocks. Now, real estate stocks, commonly known as REITs, they're obviously some great ways to go. They're fairly steady as far as income when it comes to dividends for the most part. And I do actually have a decent amount in both of these companies, but I don't know if me buying more into them now is going to be beneficial based off of my actual cost, because if I go into them, let's go here, my real estate. So if I go into these companies, so like Realty.O is one of them, a very popular one. I'm actually, my average share price is $57 and the stock price is $60. So right now I would actually be increasing my average because of the fact that it costs more for me to buy one share than I was buying before. And then new residential income, which is kind of popular here on YouTube with a lot of people. My average price is $8.30 and the stock price is $9.80. So similar to the other one where every time I buy more into it, it's actually going up in average cost because this is higher than what I pay on average. That means that these numbers are kind of, going against each other, so my average price will end up going up. Not necessarily a bad thing if I'm in it for the long term and I believe in the companies and I know that, they're going to be there. But the one thing I do have is Lockheed Martin, and I talked about them in a previous episode as well too. So LMT, Lockheed Martin, which is this one right here. So this is the only one in my portfolio aside from AT&T that is actually down on its stock. So let me go to my holdings. I'm going to go to my unrealized gains. And I'll show you here. So right here, this is Lockheed Martin. I'm going to see if I can get the whole thing nicely done here. Nice. So right here, I own almost 2 shares, which, by the way, if you're not familiar, fractional shares is one of the great features that M1 Finance has. A lot of other brokerages have them now too, which is fantastic. So instead of having to spend all, $300+ on a share, I could buy them in small increments. But they're down almost 8.73% on my portfolio. Obviously, if we go look at... Oops, let me get this here. So if we, dragging that with me. Hold on. So if we go look at its stock, down in the last month, about 2.4%, down in the last 6 months, about 11%. So not only is it down in my portfolio, but it's down as a whole, because sometimes that doesn't always have to be the case. So then, for me, like this is where I've been putting a decent amount more money in every single time I'm depositing more money, because this is one of the few stocks that still has value for me in the sense that when I buy more into it now, it's actually worth more when the stock goes back up. Obviously, we don't know, 100% of the case what's going to happen all the time, because crazy things have happened in the past, like the GameStop stock. So then that begs the question for me, do I buy more in? So on my purchase on the 25th, I actually talked about this in a previous episode. I manually bought more into this stock, more so than it would have done by itself, because you can do manual purchases on M1 Finance. So I put in an extra $35 instead of what they were going to put in, which was maybe a handful of dollars, which got me about 10% of one share. Not a lot, but again, every little bit counts, right? Just because somebody else can put in $10,000 in a week in investments, some of us can't do as much, and that's totally okay. But I think if you're being very diligent and consistent, I think it'll be great no matter what, because you're making it work for your position. So 35 extra dollars in here, buys it at a much lower price point at $340. So it lowers my average, which is great, because that's always nice to lower my dollar cost average. A lot of people call that DCA here in the investing world. So then, then I think to myself, is this going to be where I want to put a good chunk of money? And then for some reason this afternoon, I actually wanted to put another $13 into that, and then a little bit into another stock because it was kind of down for the day. But look, I put another $13 in. This time, the price was actually going back up, so I paid an extra little bit more than I would have if I put that $13 in the day before. So this bought me about 4% of a share. So you can see here, 0.039, that's about 4% of one share. So, is that where I'm going to kind of stick to it? And like, how long do I keep going with a stock that might be on a downward trajectory for a while? But what I like to do is look at its history, right? So like with Lockheed Martin, I kind of showed this before too, is that like you can just see here, it goes up, goes down, goes up, has a downward trend, goes up, goes down, goes up, goes down, has gone up, gone down, and then kind of right now it's on a downward trajectory. So right now I think it's kind of in its like 2019 price point. So we'll see, if it's going to keep moving downward. A lot of people call that like the catching of a falling knife, where we don't know where the bottom is for this stock. So do we keep buying now, or do we wait until it gets much closer to a rock bottom? I'm a believer in dollar cost averaging, which is again just buying in as I can, whether the price point has gone down or gone up from the time before. But I'm going to show you here too. We talked about stocks going up. Let me delete that. So Apple right now, I've been buying into Apple for a little while because after their stock split, so I think their stock split was like right over here, give or take. But right after their stock split, so they were like jumping up like crazy, and then they kind of had this downward, picked back up, and then kind of had this like little tiny roller coaster ride. And then they kind of went back up, then they kind of flatlined for a little bit, and now they're skyrocketing again. So you can see here, they're much closer to their 52-week high than Lockheed Martin is, because Lockheed Martin is about in its mid-range. So then that begs the question of like, okay, well during this time right over here, when this was down, this is when I was buying more of Apple because they, went under their 52-week high. But now that they're getting closer and closer to it, I'm buying less. So I'll show you here too. This is kind of what I mean. So I can actually just look for Apple right over here. So January 19th, so I didn't, in my last purchase that I just recently did, I didn't buy any into Apple. So January 19th is the last time I bought into Apple, and they were trading at 127.87. So do you remember when we just looked at this? This is now at 143.16. So the last time I bought into Apple was at this price point. And because they were going up quite a bit over the last week and some change, I slowed down on my purchase because I just don't want to pay it at that higher premium if I don't have to, knowing that possibly that the stock might come back down a little bit, might recover. And if it keeps going up, that's fine too. I'll eventually start putting a little bit more back into it. I just saw more value in buying something like Lockheed Martin temporarily while that stock is down. Now it's been down for a little longer. You saw the graph that we showed a little earlier. So for some people that might be tough. That might be really, really hard to do when you are looking at something like Apple. Check this out. Like, I'm cleaning all this up. Like, look, they were kind of flatlined for the most part for the better part of what? Like 3-4 months, right? That doesn't seem like a long time. And it's not that dramatic between this, but like to some people, they're like, well, man, their high was over here and they're not coming back closer. But to me, I was like, hey, yeah, I'll keep buying into them. And then obviously they recover and now they're doing really, really well, which let me load up here. Let's see where I'm at with my Apple stock. So with Apple right now, I'm up 30, almost 36%, which is about $645. Now, something to keep in mind is I have 17 shares, but that doesn't mean I started off with 17 shares. I bought really small amounts every single week that I could in small increments, and then it built up to this price point. So, getting to this right here, that looks good, but, do I think it's going to keep going up right now? It's tough to say. Coming back here, let's go back to Lockheed Martin, because I think this is like the interesting thing. So, after the dip in early 2020, it kind of recovered a little bit there, had another dip like we talked about, and now it's kind of flatlined for a few months, dropped a little bit, kind of flatlined, and now it's kind of been on a downward trend for the better part of about like 4 months or so, 3-4 months. So like it can get tough, and I can understand why some people maybe get really, really hesitant with like going through and purchasing this stuff. But I think that with, what I was talking about when it comes to the 52-week highs, right? The 52-week ranges right over here, all of this, like it's so tough when all of them are getting so high to that, or such to that point that it's hard to get value out of these stocks if I'm buying them at those higher price points, thinking that possibly they might come down, because that tends to be the case when a lot of stocks are starting to hit that 52-week high. You start seeing a little bit of that dip. So, my thing in my process in my head is always like, do I wait? Should I hold off on Apple, which is what I've been doing? When do I start buying back into them a little bit more? Is it a point where, okay, if it gets to 160, clearly there's no slowdown. Do I just keep buying into them? But those are like the decisions we have to come up with. Those are the ideas of like, okay, well, how do I want to do this? Now, as a long-term investor, the day-to-day stuff doesn't matter as much. Like let's go back to Lockheed Martin. Keep using them as an example because they're the best example for me now. Obviously, in the last year, they were down 20%, and that's really tough. But look, if we look at a 5-year map here, they're up 62%. So if they come back, if they recover, what's going on now is not as big of a deal. If we look at the 10 years, they're up 334%. And we're not even talking about the dividends here. We're just talking about the actual stock value. So then that's when I kind of consider like, okay, well, let's say they do in the next 10 years get another, let's say even 200-300%, right? And if I'm buying it now, I'm just buying it at a discount than where it's going to be later on down the road. And like I said, that's not even including their dividends, which their dividends are nice right now. 3% on their dividend yield, 42% payout ratio, and almost a double-digit growth rate, which is something I love. Like this right here, this is like, I wish all stocks that I had in my portfolio looked like this too, because this is a great yield. Obviously, it's not 4% like some people talk about when it comes to dividends, but I'm long-term. And the reason I'm long-term is because this growth rate over here will help increase my yield on cost for what I'm paying for now and what it's going to be worth 5, 10, 15 years from now. And this is just a safety measure to make sure that they're going to be able to increase that dividend consistently, because anything under 60-65% is looking really solid for most companies, and being at 42 is really, really good too. But I'm always curious, based off of where the market is right now, based off of where my portfolio is right now. You can see here, let me actually zoom in a little bit here. So you can see here in the value over time, like this is just constantly on an upward trajectory. You can see a couple dips here. You can see a dip right here, which was in June. This one was October. I remember that one. That was a pretty big dip. A nice kind of correction there. But like for the most part, like you just see this stuff like moving up, right? Like it's just on a constant upward trend. Now, granted, a lot of that is with me putting my money in, but I mean, we talked about this. Oops, let me close that off. Like, look at the last quarter. Just dollar-wise, we gained over $3,000. Don't worry about the percentage. Honestly, the money-weighted returns on M1 Finance percentages kind of like make that a little wonky. But yeah, like, look at this. It's a nice upward trajectory. So, how long is that sustainable for? When are we going to have another like dip or correction? It's always tough to tell. But I think if you are somebody who is constantly investing in the market, if you're somebody who's like really in it for the long term, that doesn't always matter. But I think being strategic with it, like me deciding to go with more Lockheed Martin than Apple stock, I think that's just going to give me more value long term when Lockheed Martin recovers, and then hopefully in a weird way that Apple goes down in price with their stock, and then I'll buy more into them again. So that way I just get the most bang for my buck in the long term, and for a lack of better terms, I guess, in that regard. But nonetheless, I think because I'm focused, because you're focused and you're watching and you're paying attention, that it's going to be worth it long term regardless, because I don't think there's a wrong or a right way entirely. Obviously, there's good and bad things you can do when it comes to investing, but I think if you're intentional with what you're doing, it's going to be worth it for you long term, whether it's a taxable account like mine or you have a retirement account. Either way, I think it's going to be fantastic. Now, like I mentioned, I'll have that link in the show notes down below if you're with M1 Finance, but I also want you to keep on watching more content here on the channel, because I think it's going to help you continue to learn and grow. And I might say things in other videos that might, trigger some thought when it comes to investing. So check out my video right over here to keep on learning and keep on watching. My name is Dennis, and I will see you in that next video.